Do it. Good. All right. So now you see my website.
There you go.
You see the website, and you see also the PowerPoint.
Yes, sir.
Okay, good. Let me get started. Thank you to Norm and Ryan from Bull Bear Trading, or Bear Bull, excuse me, Bear Bull Traders. I apologize. We work with traders, and we match up well with most of you, from what I understand from Ryan. Our cornerstone is trader tax status, being in the business of trading. That opens up a whole series of tax benefits, business expenses, chat room costs, computer monitors, education, everything, data, market, the works. We're going to go through some of those business expenses. If you don't have trader tax status, you can't deduct any of those items. Second, with TTS, you can elect 475 mark-to-market accounting, tax loss insurance, exemption from wash sales, no capital loss limitation, a shot at a 20% QBI deduction. And if you want an SCorp, you can also deduct health insurance and a retirement plan. So there's a lot of tax breaks, but you got to be an active trader to qualify. You have to have trader tax status. So if you come to our website, Green Trader Tax, we put it right in our name. If you go to the tax center, you can read about trader tax status. There's a tax center page for everything. So let's go off the website. We'll come back later on to discuss some of our services and go into the PowerPoint presentation. This is sort of like where we stand now in late 2019. Our firm is dedicated to the needs of traders, some investment managers, but mostly traders. We focus on tax compliance. That means preparation and planning. So you're doing your year-end planning now. There are some great moves to make. And then we prepare your entire tax return come tax time. We also have a new review service this year for those who want to self-prepare or use a local accountant. We have a virtual communication process, so we work with traders around the country. If you look at the most populous states, those are our top states. California first, Texas second, New York is about 3 or 4 or 5. Today, this information is educational. You may want to have a consultation with me. I'm a CPA. We are not affiliated with Bear Bull Traders. So we're going to talk about trader tax status, trading as a business. Tax treatment for securities. I understand most of you trade equities. The wash sale loss limitations that hit equities traders, securities traders, and how to get away from that with the 475 election. And the SCorp for the health insurance and the retirement plan deduction. So everything is riding on trader tax status. And I spoke to Ryan for a few minutes earlier today, and he explained that 85, 90% of you probably qualify for trader tax status. So I want you to know what the rules are. This is something we can claim now after the fact. You didn't have to elect it. Now, don't confuse that with that 475 election for the tax loss insurance that you had to elect. So this is first about the business expenses, the 475 and the entity. So it's all riding on it. So with eligibility, you're going to get all these benefits. You're going to, one, deduct trading business expenses, startup costs, where you go 6 months back from when you started trader tax status, and home office expenses. So typical trader has 10, 15, 20,000 or more when you include the home office. And if you're in a decent tax bracket, federal and state, you're saving thousands of dollars. Now, you're also entitled to file a timely election for Section 475. That exempts you from those wash sale losses. So let's say you take a loss in December and you're day trading, so you're going to get back into that security in January, most likely. That's going to trigger a wash sale, phantom income for December. You think that you made 50, but your 1099-B says you have to pay taxes on 100. That really hurts because of that wash sale loss deferral. So if you're a mark-to-market trader with 475, you're exempt from the wash sales. You don't have that problem. Now, if you lose a lot of money this year, the markets were volatile, you got caught on the wrong side of the markets, long or short, and you had a loss of $50,000, you don't want a $3,000 capital loss limitation. You want to write off that whole $50,000 against your wages or your spouse's wages or any other type of income. 475 gives you that. And new this year, starting in 2018, 475 traders are also eligible for the 20% QBI deduction, qualified business income deduction, under the new tax law. So you make 100, you write off $20,000. It's not even an expense. You just get a deduction for $20,000. And you can't do that on capital gains. You can only do it on 475 income. Now, if things are going good with trader tax status and you're sitting there with a big health insurance premium, $1,000 a month, $2,000 with a family, well, more or less, and you want to write that off, could be $24,000 a year for a married family, you need to have earned income. You don't have that from trading gains. So you can have an SCorp that pays your salary and then deduct the health insurance and don't even have any payroll taxes in connection with that. And you can go further than that. You can do a retirement plan contribution where you can sock away up to $62,000 for 2019 or $63,000 for 2020 in a solo 401k. So these are like the series of benefits related to TTS. So how do you qualify? So you're sitting there now today. I want you to hit all my golden rules, but then also you got to claim credit for the trades. You can't use a trade copying service, an automated trading service provided by others. We're going to go through that at the end. So let's start with the big three. You got to have a substantial volume of trades. 4 total trades per day is the minimum, counting the open and close separately. So 1 round trip is 2 total. I'm counting the totals. Scaling in and scaling out, you count it separately. So 4 total trades per day. Frequency, you got to execute a trade 4 days a week. Technically, we have 75%, 3 to 4, closer to 4. I understand a lot of you guys trade all 5 days of the week. Your average holding period must be under 31 days. You're a day trader, so and swing traders qualify too. It's got to average under 31 days. Got to spend 4 hours a day, including all time, research, administration, trading. You got to have the intention to run a business to make a living. Doesn't have to be your main living. You might lose money, but your intention is to make a living. Could be a supplemental living. Maybe you're transitioning to full-time trading. You have a serious business setup, multiple trading devices, monitors, home office. Got to have material account size. So if you're a pad and day trader, you got 25 minimum. A lot of brokers want to see you have 30 for a little cushion. Now, if you go offshore with a broker, they may let you skirt the pad and day trader rules, but you got to have at least 15,000 to impress the IRS. 5,000 on a mini account is not good enough in our view. Now, here's what doesn't qualify for trader tax status. You hit all the golden rules, but you're using a trade copying service or platform where the client does not significantly depart from suggested trades. And I think that applies to you guys because you're in a live trading chat room. You're watching some trading. Now, they're not telling you what to do. You're a fly on the wall. You're doing what you want to do. You're picking and choosing what you want to do. You might not be doing the exact entry and exit signal. You're not having API scripting for automatic execution. Think of a pilot in the plane. You can have automation controls. You can have suggested flying schedule maps. You're also manually flying the plane. You can't be a passenger. You got to be in the cockpit, significantly flying the plane. So if you have a platform or a service or a chat room, that's this area. And I can talk more about that, Norm, a little later on. But it sounded to me like if you depart and that you can claim credit for all hitting those golden rules. Now, the same goes for using an automated trading system. You know, if you go out and self-create your own algorithms for entry and exit signals, you're self-creating it. You should get credit for it. If you use a third-party system, you might not get credit for it. But if it also has API scripting for executions, it's harder to claim credit. Now, also the outside investment manager. If you have your trading accounts, let's say with IB, and you have some outside managed accounts using another broker, you can't claim credit for those outside manager trades. And you probably wouldn't want to anyway, because those could throw you over the 30-day average holding period. Now, also, if you're trading in your retirement accounts, that doesn't qualify for trader tax status. So here are some of the business expenses you get with it as a trader with TTS. And you can claim this for all of 2019. You can amend your returns for 017 and 018. TTS is claimed after the fact, and you look at it each year. Sort of like you put the bread in the oven, you pull it out of the oven, and did it rise to be bread, or is it flat bread? So first, tangible personal property. That's your computers, your equipment. Each item is under $2,500, just expense it under the safe harbor. If it's over $2,500, you can get full expensing with Section 179, 100% depreciation or 100% bonus depreciation. The new tax law is very generous with first-year expensing. Same goes for your soft costs, your intangible property, like your software, your platforms. Setting up a new LLC with us, you're going to amortize instead of depreciate. You're going to amortize. It's a fancy word for expensing those startup costs, Section 195, going back 6 months. So if you started qualifying July 1st, 2019, you could go back to January 1st to get back those chat room costs that you capitalized into Section 195, where you expense up to $5,000 the first year and the rest over 15 years. Organization costs are Section 248. That's like setting up the LLC with us. Education, if you're getting education, that's part of Section 195 if it's pre-business. If it's after you have trader tax status, it's fully deductible. So it's important to distinguish between the pre-business startup and the post-business costs, which are fully deductible. And there's publications, subscriptions, market data, charting services, self-created ATS, cloud computing, professional service, including accountants and attorneys, chat rooms, mentors, coaches, supplies, media, communications, travel, meals, the works. You can see seminars, traveling to the seminars, supplies, assistance, office rent, consultants. And a big one is the home office, the business portion of your home. It might be 10%, 20%. Every cost related to the home is unlocked as an expense. The home office does require income, except for the mortgage and property tax, real estate tax portion. Margin interest, fully deductible. Now, if you're an investor, you're allowed margin interest, but only up until investment income. Stock borrow fees, all the costs of being a short seller, all are deductible as business expenses. Now, you need the SCorp if you want to also deduct the health insurance and retirement plan contributions. Now, again, if you're an investor, the new tax law really hurt you. It suspended all miscellaneous itemized deductions subject to the 2% floor. That includes investment fees and expenses. If you have a separately managed account with an outside advisor and you're paying them incentive fees and management fees, even if you have trader tax status, what you pay the investment manager, none of that is deductible. It's suspended. It comes back in 2026, and maybe they'll renew. We'll see what they do, but that's pretty far off. So the new law, TCJA, they left 2 itemized deductions for investors. Plus, you may use that roughly doubled standard deduction. So you may not even itemize. So you got investment interest up to investment income. That's it. The rest is a carryover. And your stock borrow fees or other itemized deductions. So you can see with trader tax status, you do a lot better. Norm, were there any questions about qualifying for trader tax status? And
Hey,
otherwise,
Robert,
I'm going to jump.
Yeah,
Go ahead, Ryan.
Go ahead. You can proceed for now. Yeah, we'll do the question and answer for our members towards the end. Thank you.
Good. All right. Let's talk about how securities are taxed. Securities traders have ordinary tax rates on short-term capital gains. Wash sale loss adjustments, a royal pain in the neck for a securities day trader. 475 exemption from that. capital loss limitations, and accounting challenges. You can't just rely on a 1099-B in a lot of situations. So let's start with what securities include. U.S. and international equity stocks. I understand that you guys are mostly trading U.S. equities. That's the purest type of security. Bingo, said, that's done. But if you happen to also trade U.S. and foreign equity options, narrow-based indexes made up of 9 or fewer securities, the SPY is not narrow. I mean, the SPX is not narrow. That's broad. Options on the narrow-based indexes, securities and commodities ETFs like the SPY, options on the securities ETFs, volatility ETN debt instruments, bonds, mutual funds, single stock futures. You guys have it easy. It's equities. So you use the realization method. The IRS taxes securities transactions when a taxpayer closes an open trade. So you buy a symbol. If you hold it through year end, it's not taxed. You didn't realize it. When you sell it, it's realized. When you close a short position, it's realized. You can defer capital gains by holding open securities positions at year end, but you're day trading. With tax loss and selling, you can realize capital losses before year end, and then you don't want to get back in for a wash sale. Again, if you're day trading, you're flat at year end anyway. But just because you're flat at year end, when you buy back on January 1st, you trigger the wash sale. A lot of you have probably had wash sale issues over the years. So now it's short-term versus long-term capital gains. Short-term uses the ordinary rates. Those are the progressive rates. Long-term uses significantly lower progressive rates. You got to hold the position for 12 months or longer. So what some people don't know is that the long-term rates are 0% for the lowest two brackets, 10 and 12% ordinary brackets. So if you're making like under 77 married, it's 0%. Then all the middle brackets, the long-term rate is 15%. And then if you happen to hit the top bracket, the 37% ordinary bracket, the long-term rate is 20%. Most of you are short-term. Now, if you have capital losses, you've been hurt with these capital loss carryovers. But remember, capital losses offset capital gains without a limitation. If you had a carryover from last year of $100,000 capital loss carryover and you make 120 this year, you offset the whole 120 with 100 and you only pay taxes on 20. If you have a net loss after all capital gains and losses are netted out, short-term, long-term, everything is netted out. If it shows a net loss of greater than $3,000, you're going to have a carryover to the next years, and that never expires because you're only allowed $3,000 against the current year other income. So you lose 25, you're allowed 3, you carry over 22. Let's talk about the wash sale losses because that's a pain in the neck. It causes headaches and potentially higher tax bills. And I'm going to show you how to avoid them. So if a taxpayer repurchases a substantially identical security within 30 days before or after, the IRS applies the wash sale loss rule. So if you're day trading Apple, that could happen every day if you have losses. So you got to defer the loss to the replacement position's cost basis. So I don't care if you have all you do is trade Apple or pick a stock that maybe you have more losses in. You trade symbol A and you lose money every day of the year. You lose $10. And you make money a few days, but not enough to absorb some of those prior losses. They just keep kicking the can down the road. If you sell that position before the end of the year and just don't get back into it until February 1st, you broke the chain and you don't have it. So for example, if you sell Apple at a loss December 15th and repurchase Apple January 10th, you triggered the wash sale and you had to defer the loss. So it's critical to avoid the wash sales at year-end in taxable accounts by breaking the chain, break that 31-day chain. You sell by year-end. You don't repurchase substantially identical. That means Apple stock, Apple options, but you're not really trading. Most of you are not trading options. That's what substantially identical means. Apple's not substantially identical with Google. That's a whole different symbol underlying. Now, if you're also trading an IRA account, let's say you have an individual account with IB and your spouse has an account with Fidelity and you have a joint account with IB and you have a couple of IRA accounts, you're supposed to do the wash sale analysis across all the accounts. And if you have a wash sale loss in your taxable account and buy it back in your IRA, that's catastrophic. You never get that loss. There's no way to record it in the IRA. That's why you may want to trade in an entity. You may want to trade with 475 to divorce your trading from your IRAs and your investing. Your broker doesn't pick up on that problem because the IRS rules for brokers differ from the rules for taxpayers. You really should use a trade accounting software like a trade log or use our trade accounting service to be compliant with IRS rules for taxpayers. All you do is trade equities in one account. You don't have any other accounts. You don't trade in an IRA. Then you can rely on the 1099B because there's no apples and oranges. So wash sales are a pain in the neck. You got your TTS. You hit your golden rules. You want to consider a 475 election to avoid so that you're exempt from wash sales. You get refunds much faster, and you might get that QBI deduction. So TTS traders may elect it. It's ordinary gain or loss treatment. You can elect on securities. You can elect on commodities. You don't want to elect on commodities, including 1256 contracts, because you want to retain those lower 60/40 capital gains rates on 1256 contracts. So you want to elect on securities only if you have a clean slate so that you can be exempt from wash sales, exempt from the capital loss limitation. You can deduct the 475 ordinary loss against wages, other income without the capital loss limitation. Now, there is an excess business loss limitation if you lose a lot of money. And then you have to carry over the excess as an NOL to the next year. So the 475 income, if you have it, net of expenses, that might generate that QBI deduction. That's a wonderful deduction. That's how pass-through entities get some benefits like the SCorps got with those lower flat rates. That was a big part of the new tax law. So let's say you come to me and say, Bob, I got the trader tax status. I'm benefiting from 475. But, I also want a retirement plan deduction. I need a health insurance deduction. I don't have another source of earned income. So we go with an LLC SCorp. You form a single member LLC or a spousal member LLC, and you make an SCorp election to conduct your trading business. The SCorp pays the owner trader, you, officer compensation at year end. We're doing that for our clients who have this set up for 2019. We're doing it now. On the W-2, we include the reimbursement of the health insurance premium. That's how you do the deduction. It's a little nuanced. And if the client tells us this time of year, hey, Bob, I'm profitable. I want to deduct $56,000 for a solo 401k, age 50 or older, another $6,000 up to $62,000. How do I do that? Okay, let's do this amount of salary, $148,000 to do the full $62,000 because you're over age 50. Or let's just do the $25,000 elective deferral because that's all you want to put into your retirement plan. That's the decision making we make now. Now, it's too late to set up an entity for 2019 now. It's too late to elect 475 for 2019 now. You can set all this up for 2020. Hit the ground. If you wait to start working with me in early January, you have your consult, we do the entity. It could take several weeks to get it going. If you want to hit the ground running on January 2nd, when the first day the markets trade, if you want to be ready to trade, here's what you can do. You can form a single member LLC with us in mid-December, early December, late November now. We'll get the EIN, the employer identification number. You'll open your brokerage account before year end. You'll capitalize the account so it's ready to trade on Jan 1. That single member LLC is a disregarded entity for 2019. That avoids an entity tax filing for 2019. And then on January 1st, we can add your spouse if you want to have your spouse as an owner. And you can file a partnership return if you don't want the retirement plan and health insurance deduction the first year. Or if you want health insurance and retirement plan, we file the SCorp election within 75 days of January 1st, which is around March 15th. So you're going to be a 2020 SCorp, and that SCorp can consider a 475 election. So what you would do is you would have a consult with me for 45 minutes to see if you have TTS, what elections you need, should you elect 475 next year or not. Do you need the entity or not? And then if you go with the entity, you would set that up with us and have it all ready for January 1st. And then we could prepare your 2019 tax returns with trader tax status. And we can prepare your 2020 SCorp tax returns or partnership tax returns and individual, because that's our main business. So I'm going to get to your Q&A now. So let's take a look at your Q&A. And Norm, I think, is going to ask the questions.
Yeah, we can do that. And Ryan might hop in for some of these as well. So let's see here. Stuart was asking, he filled out a 475 mark-to-market on the 2018 year. Are you covered for TTS?
If once you elect 475, it applies going forward unless and until you revoke it for every year or part of the year you qualify for TTS. So you got it on your back, which is a good thing, but you qualify for TTS to use it. So let's say you elected in 2018, you did qualify, you did use it, but in 2019, the whole year you took off, you didn't qualify, well, then it was suspended, you couldn't use it. And then you re-qualify in 2020, it kicks back in. Back to you, Norm.
Yep, sorry, my dog was barking at the delivery person here. And one thing I wanted to bring up.
I do see, by the way, I do see main chat questions, but they're scrolling pretty quickly.
If you scroll up a little bit, it should pause them, and I'll throw these out. So one quick thing on the 475 mark-to-market. You can elect, and you may have said this, but I just wanted to clarify. Trader tax status you can get for a portion of a year. For instance, I first started trading full-time in May, so you can take TTS for the May to December portion of that.
Yes,
instance, right?
absolutely. Now, November to December is too short. Q4 is okay, but May to December is better. And then we want to see you continue into the next year too, not just one and done. But yes, you'd fill out your Schedule C for that time frame, and that would be the business expense period. And then you'd have your startup costs going 6 months back before that date.
Great. And then just to clarify, the 475, which is mark-to-market, different thing, you have to elect that in advance.
You had to elect that by April 15th, 2019 for 2019, or within 75 days of inception internally for a new taxpayer, which includes a new entity. So if you're trading an individual account and you want to claim a Schedule C with TTS to be a sole proprietor, you had to elect by April 15th. And then someone may say, well, I didn't start until May. I didn't know about it. That's tough luck. If you set up a new entity, you could have elected it. So maybe you don't have it this year, and just be very careful to navigate around those wash sales at year end. And then see if it's good for next year. Now, if you have a big capital loss going into next year, Norm, you want to think twice about electing 475 because that's ordinary income. So if you're sitting there in Q1 next year, you have a capital loss carryover and you had a great Q1 that used up the capital loss carryover, you would skip the 475 election and then maybe set up a new entity for the rest of the year with 475 or wait until the following year as a sole proprietor.
And one
Robert,
more.
I just want to interject. Sorry, I just want to interject really quickly, Robert. On the chat, would you mind just clicking the 4 arrows that are kind of going away from each other next to where the chat tabs are, or the main chat, off-topic, admins? On the left side, just down a little bit, click the 4 arrows right to the left of the gear, or right of the gear, excuse me.
Right of the gear.
Go to the right. Go to the right.
Well, up top. All the way up top?
Nope, sorry. Where the chat is, where you see all the people chatting on the text on the left
right
side.
under the picture, yep.
Right.
Yep, and then see it says admins. And then you got a little gear icon, and next to the gear is a little, like, 4 arrows. Click those 4 arrows for me, please.
Oh, you want me to expand it? Yeah, okay.
Yeah,
I see the full chat.
There we go.
Right.
Thank you so much. Sorry.
Okay, thank you.
So along those same lines, so once you take that 475 election for the next year, it messes with the carryover.
Well, if you have what I call tax baggage, you have a capital loss carryover, you have year-to-date capital losses, you have tremendous unrealized capital losses, you're in a ditch. Your only way to climb out of that ditch is with a capital gains ladder. the only way not to dig a bigger ditch is with a 475 election. So you got to wait to the decision-making moment, see where you stand, and make the right chess move. If you, at that decision-making moment, have year-to-date gains and you see you have a lot of capital losses to use up, you skip the 475 election. But let's say you have a lot of you have baggage, a lot of capital loss carryovers going into next Q1. And in Q1, you lose a lot more money again. You don't want to add to that capital loss carryover. You want the 475 election, but then you set up an entity to get back to capital gains treatment. So this is the gamesmanship theory of our strategies. And that's in chapter 2 of Green's 2019, followed by 2020 Trader Tax Guide. So people may want to get that guide and then read chapter 1, Trader Tax Status, and chapter 2, MTM. Now, if you have a clean slate and you're an equities trader and that's all you're doing, you know you want 475. It's only when you don't have a clean slate that you got to put a little more thought into the election.
Sure. Perfect. All right. On to the next question here. Single member LLC or SCorp in California. Is it still worth it with California treatment of single member organizations and the fees for SCorp or LLC?
Well, LLC has the $800 minimum tax and his LLC user fees if you make some good money trading. The SCorp has a 1.5% franchise tax on net income. If you go with the SCorp and you make $200,000 and know that you're committed to maximize the retirement plan, to have salary of $148K, the solo 401k of 56 or 62, depending on your age, plus your expenses and your health insurance, you're getting your net income under $53,000. The minimum tax is $800 in California. $53,000 net income divided by times 800 divided by 1.5% is $53,000. So you just keep your SCorp net income under $53,000, and you can just beef up your wages to get under the $53,000. That will trigger Medicare tax if you're into the Obamacare zone of Medicare, but you have that Medicare on unearned income anyway. It's a little quirky. I'm getting into the weeds on you now, Norm. I cover California and the SCorp very closely. All this I just said in detail in the guide chapter on entities. We're all over California because it's our biggest market. If you're making millions, then you go with a dual entity solution, a trading partnership, which is free of the franchise tax, free of the minimum tax, and the SCorp management company. But I would only recommend 2 entities if you really need it and you're making a lot of money and we're avoiding franchise tax.
And guys, the guide he's talking about, I've used it in the past as a reference. You can find it. He redoes it every year. I know there were some really big changes for 2018. But you can look, if you go to greentradertax.com, you can find it there. It's a great reference to have. Really a must for all traders, I would say.
Thank you. If they get the 19 guide today, it comes with a free upgrade of 2020, which comes out in January. I'm writing it now.
Oh, great news. Great news. Thank you. Let's see here. Leo asked, I had substantial losses this year. Can I still get trader tax status for this year?
That's a question I get all the time, Norm. People listen to the content and they say, wow, Green's talking about writing off ordinary business losses with TTS, but that's just from your expenses. If you want to write off the trading loss too, you have to file that 475 election. While it's not too late to look back at all of 2019 and claim TTS for business expenses, like think of that as undergraduate school. Okay, yeah, we claim the degree you graduated undergraduate school, but you never applied to graduate school to get the 475 election by April 15th, and there's nothing that can be done about it. You're stuck and trapped with a capital loss carryover, which gives you baggage for the 475 election decision next April 15th.
Yep. Absolutely. So, I mean, and then along the lines of those questions, I think it mixes up TTS with 475 a little bit.
Right. One is undergrad. TTS is undergraduate school. You got to go there to go to grad school, but not everybody goes to grad school. Not everybody wants 475. So that's an option, but you got to file on time. And the IRS is really a stickler for filing that election statement on time. And then there's a second step too, filing the 3115 with your tax return. That's getting into the weeds a little bit, but that's in the guide.
And you do that
And
for
also
next year.
there's a lot of free recordings on the website and blog posts. There's plenty of places, the tax center, that people can get basic, great information and then get more premium information in the guide.
Yep. All right. Emily's asking, what is your tax review service for self-preparers with TTS status and 475 election in place include, and what does it cost?
It costs $350. That's for 1 hour with my partner, Darren Neuschwander or Adam Manning. It's the first time we're offering that. It's not a full review because we're not looking at all your source documents, but you could have a 1 hour meeting with Darren, let's say Neuschwander, who heads tax compliance services. He's my co-managing member in Green, Neuschwander, and Manning. Or Adam Manning would do it. They review every tax return that we prepare that goes out of the office. They would help you determine whether you have trader tax status. If yes, how to file the Schedule C, help you with the footnote, help see if you did the 475 election properly, help you with the Form 3115 filing, and more or less help you through the self-preparation or help your local accountant through. This is for someone who doesn't want to step up and get our full tax compliance service, which costs more than $350. I mean, the minimum price is $890, the partial payment for the tax compliance, and it might cost in total $1,200, so you pay the balance due when we're done. So we're trying to give more options to our clientele, because for years, some have self-prepared with our guides. We used to have examples guides years ago, but we discontinued that.
Sure. That is great news. James is asking, do we fill out a form for TTS?
No, it's something you claim, and you show that by filing a Schedule C that says trader and securities using the right SIC code, and then having a footnote which explains trader tax status and how you qualify for it. And we recommend the footnote because the IRS computers might not otherwise understand why they just see business expenses on a Schedule C with no revenue. What kind of business is that? And we explain in the footnotes that the income from trading is on other forms, and we show where. Now, if you use an entity, it looks a lot better because everything is consolidated on an entity tax return. And it's a nice time to think about an entity for next year, because this way the whole year you have your entity rather than partial year Schedule C, partial year with the entity. That consolidates the tax compliance. And then we can do the entity tax return, and your local accountant can do your individual if that's what you prefer. But we encourage you to use us for both, because the what-if calculations go on both returns. Because remember, the entity passes the income and loss to your individual return.
Sure. Let's see here. Next one from Terry. What is the excess business loss limitation amount?
It's 510,000 married, 255 single. So if you lose 300, and I went through some examples of this in my year-end tax planning webinar recording, which I did with IB last week. And also there's a blog post about the year-end planning as well with some good examples. So if you single, you lost 300 with 475 in expenses, that's a lot to lose, but it would be limited to 255, and the other 45 would be an NOL carryover. And then you might have an NOL from that loss anyway, unless you had wages income to soak it up. But you might want to do a Roth IRA conversion before year end to soak it up. So I go through that in the year end planning content, which I think you mentioned at the start as well, Norm. Thank you.
Yeah, correct. All right. No Runs is asking, does TTS and your 475 election fix the issue with a similar trade in IRA? I'm guessing that refers to a wash sale.
If you have 475, you don't have a wash sale. So if you bought it back in the IRA, it didn't matter. It didn't count. It's only if you have the wash sale at the outset in the taxable account. If all you do is trade an IRA, you don't have wash sales. It's when you trade, you got the IRA, you got the taxable account, you got 100 in your taxable account, you got 500 in your IRA. You want to make the same trades in both. You're trying to maximize your capital. But it can, and you figure, hey, the money I make in my IRA won't be taxable, but it can really backfire on you if you got this wash sale problem. And again, your broker doesn't pick that up. They only calculate wash sales based on identical symbols, but the IRS wants you to do it on substantially identical, and that means the equity and the equity option. But again, you guys are mostly trading just equities. So yeah, 475 is the exemption from the wash sale headaches altogether.
So I'm going to throw in a follow-up to this that I know I get asked a lot in here, and that is, if you take the 475 election and you're under it, you're past the process and everything, I'm allowed to also invest for my retirement, or have an investment account. How do I keep those separate without, let's say I want a brokerage account, not an IRA or a retirement account, but not an active trading account? How does that work, Robert?
You can segregate investment positions which are not subject to TTS assessment, so they wouldn't undermine your holding period, let's say, and they're not subject to 475. So let's say you have your long Apple in your portfolio, all your FANG stocks, but you trade them in your trading account as well. Well, the IRS is going to say, wait a second, you're trading Apple, but you're also holding Apple. We want to grab at that long-term investment so you don't get a long-term capital gains rate, and you have to pay taxes this year with mark-to-market. Or if you have a big loss in the Apple that you're trading, we want to kick that out of 475 and put that into investment. The IRS can play havoc on you, and based on whatever's best for them, whatever doesn't prejudice the government. The way to deal with that is, number one, you might want to ring fence your trading into an entity. That spousal partnership, the spousal LLC partnership, the single member or spousal member LLC SCorp. By ring fencing it into the entity, it divorces it from the individual return, and you elect 475 in the entity, and then you don't have to worry about the IRS trying to apply wash sales between related parties. Now, if you're not trading the same symbol, like you're investing in energy, in tech stocks, but you don't trade tech stocks, the ring fencing isn't absolutely, with the entity is not absolutely required. But you still want to have a separate account for your investments and say, this is my investment account. I don't trade in this account. These, when you buy something, you're designating it as an investment the day you buy it. You can't, if you trade a position and let your profits run, it can't morph into an investment position. Now, this all comes into play because sometimes people have big losses on investment positions and they try to sneak them in through us as a TTS 475 position, and we don't permit that. So I do like careful segregation of investment positions. Don't get overwhelmed with what I just went through. I went through the worst case scenarios. In most cases, it's pretty simple to segregate with just a separate account, and to segregate in form and substance. The IRS had a proposed regulation years ago on this, and they didn't pass it because people could trump form with substance. So it should be in form and substance. So you might, let's say, for example, you left Microsoft, you had a lot of employee stock, it was clearly investment. You have an investment program that's different from your trading program. So you should keep them separate. Did that sufficiently answer the question? I know I got into the weeds on
it. Absolutely. It's something that comes up a lot, so thank you. Hager is asking, I've been actively trading for the last 3 years. I've created an SCorp, but I'm not trading under that account with my broker. What is my option?
You don't have an SCorp trading business because you have an SCorp in form only, not substance. This is a mistake made by many. You'll see it in the tax court cases. Someone sets up an LLC, they never get the SCorp election filed, or they do, but they don't open up the entity account. One reason is because a lot of brokers charge higher professional data feed fees on an entity account because they can't police it to know if you take in investors, which you should not, by the way, because then it could be investment management and you may need a license and you should consult an attorney. So they keep the individual account because they want to pay the non-pro rates on the data, or they just were lazy to set up the entity account. So the entity does you no good at all unless it has the trades, and the entity trades qualify for trader tax status.
Sure, thank you. Terry is asking, what are options for trade accounting software?
We support TradeLog because it's consistent with our content on what's a security, what's 1256, what's a prepaid forward contract like VXX without wash sales. And they do things, how they do wash sales. I started working with them back in 2000 to get them to use 475 as an option in the program. So it can generate the 475 schedule, Form 4797, or the 8949 if it's without 475. So we use TradeLog in our trade accounting service where you pay a professional license rate of 75. We do all the work at $250 an hour. If you have several accounts, that can be it can be better if you have 3 or 4 accounts. It might be better for you to get a retail license for 300 and change. But if it's just 1 or 2 accounts, it might be better to use our service. Plus, with us, you have a CPA who does nothing but this, really spotting all these issues and dealing with all these issues, because it can be pretty scary when you see a 1099-B show $1 million of wash sale loss adjustments.
Yep, I can vouch for that.
That's for the entire year. It might be nothing at year end. It might be 200,000 at year end. Read my blog posts about wash sale loss adjustments. It's right up in the blog archive.
Great, will do. Thank you. Mayhem Mike is asking, what if I open an LLC with someone that is not my spouse?
Well, then you're talking about being involved with investment management. If you have 2 active trader partners, both actively trading, neither being compensated for giving the other investment advice, it might be kind of a prop trading firm scenario, and we can consult you on that, and you could still use our entity formation service. But if that second person is non-active, or you want to use the word passive, but we use the word non-active because the passive activity loss rules don't apply. And then you're going to take compensation, which could include a profit allocation of a higher share of profits based on the capital that you put up. That's what you consider investment management. That could be a hedge fund. And then you got to consult a securities attorney, and you could not use our entity formation service.
All right. Thank you, sir. Next, Alal is asking, if we do not have TTS, does that mean your deductions are limited to your capital gains that year, or you cannot deduct anything?
Correct. Capital gains and losses always offset each other, whether you're an investor or a trader. If you want to navigate around that rule, you got to have TTS and elect 475.
All right.
Now, if you're an investor, the only deductions you get are margin interest up to investment income and stock borrow fees as itemized deductions. And you might not even be itemizing. If you don't have mortgage interest, you don't have a lot of charity, your state and local is limited to 10,000. And if you're married and comparing it to a standard deduction of 24,200 for 2019, if you have margin interest of a few thousand, you're not going to feel any benefit from it as an investor because you're using the standard deduction.
All right. Oliver is asking, is there any option for those that are on an offshore account and do not have the necessary capital that you mentioned?
Well, you can have an offshore brokerage account, but with 15K, that can be enough to qualify for TTS. You may not have the full 25K to be pad and day trader. Now, I don't know if the regulators endorse that activity. We have clients that have those offshore brokerage accounts, and by the way, you have to file your FBAR form if you have 10,000 or more at any point during the year in any account offshore. You have to file the FinCEN 114, FinCEN 114, the foreign bank account report. If you go to the tax center on our website and go to international tax, you can read about that. Now, by the way, we also advise non-resident alien traders. A lot of IB clients who we do the monthly webinars for are non-resident aliens. And I understand that you guys have a lot of non-resident on your chat service as well. So read the blog post and watch the webinar recording. It talks about setting up the W8BEN properly. citing the right tax treaty that applies to you properly so that IB does the correct withholding, it doesn't over withhold on your U.S. dividends because you're trading U.S. equities. So on your U.S. dividends that you get, the withholding, if the correct withholding is done, you don't have to file a 1040 NR. You're not looking for a refund. But if they over withhold, you'd have to file the 1040 non-resident NR to get that refund. So find out what withholding applies to, what treaty rate applies to you. IB can help you with that. Get set up properly to begin with. Be aware of estate tax as well. If you have more than 60K, your treaty may have a higher rate. Read that full blog post on our website. Just go to the blog archive and search non-resident alien. Just scroll down about, 10 or 15 blog posts, and it's there. And there's also a recording of a webinar with IB. So we don't file your Canadian tax returns, but our tax attorney or I in a consultation could give you some advice on some issues that may apply.
I'm sure that will be helpful to a lot. As you mentioned, we do have a lot of Canadian traders in the room. Let's see here. So Stephen W. is asking, we encourage our new traders, beginning traders, to spend a good amount of time in a simulator before they go live and trade real money. So that's where this is coming from. Many of us are still using sim, but we have spent a lot of money on trading, computer hardware, platform subscriptions. Can we deduct those things even though we were not tax trader status yet?
No, and I should have put that on the slides. Paper trading, simulated trading does not qualify for trader tax status because it's not live executions. So all of that is pre-business. Keep an eye on the 6-month clock. So let's say you started sim trading July 1st this year, and you have a lot of expenses, all these expenses. Now, they're all not startup costs. The hardware is not Section 195 startup to investigate and inquire. That's equipment. So you can contribute that hardware. Let's say your TTS starts January 1st with live trades that qualify, hitting all the golden rules, and that you're not copycatting. You're initiating trade decisions on your own. So you start to qualify Jan 1. You bought a computer in March. You had chat room from March through year end. You can go back to July 1st for the chat room, but you can also go back further than that for the computer and then contribute the fair market undepreciated value of the computer. And then the chat room, you'd capitalize that along with other startup. Let's say it was 10,000. You could write off the first 5,000 in 2020 with the other 5 over 15 years straight line. And that's all covered in Chapter 5 on business expenses in the guide.
All right, great. Thank you. Let's see here. True is asking, and I think this will cover a good amount of our traders too. We have a number of traders that are on the West Coast, and they have the benefit of the market opening at 6:30, so they might be able to trade for 60 or 90 minutes before going to their other full-time job. And so if we have a W-2 job that I make more money than trading with, can I still elect TTS if I meet the big 3 requirements?
Yes, you need to meet all the requirements, including the big 3. And I give that exact example in Guide Chapter 1 about the West Coast trader who trades the morning session and then checks out the trades during lunchtime and does, admin work at night. And that's a perfect example of a part-time trader that qualifies.
Great.
But you might have the health insurance and retirement plan in your job, not desperately want to do the profit sharing plan on top of that. So you don't need the SCorp, which is good. So you don't have that complication in California. And you'd just be the sole prop trader with 475 election.
Very nice. And Terry, yes, we will put up, we'll put it up and we'll email out Mr. Green's contact info for both his firm and all the stuff. And we'll put up the slide again for you in a minute as well. Mario's asking, do you offer free personal consultation? I'm paper trading, but would like to look forward to all this info in the future. there is a fee. You can go into that, but
Yeah.
we've had a number of people meet with them, and they say it's well worth the money spent.
Well, what I like to think of is that I put a tremendous amount of time into free content, which gives a lot of advice, and it requires you to do a little work to read and to consume the content. So the consultation with me, people are pretty educated, and then we really cut to the chase. You see, I'm no nonsense, and it's 45 minutes of intensive discussion with a memo at the end. So that is for pay, and that fee is on the website.
Absolutely.
Now, for new clients traders that want to sign up for our tax compliance service, we do have a 15-minute session at no charge, but that does not come with tax advice. So if you come to me with a lot of questions, then I'll channel you to the paid consultation. But if you've had a consult with me in the past, or you know you qualify for TTS and you just want to talk to us about becoming a new tax compliance client, we have the new client evaluation to be sure it's a good fit and to give you the price quote and to make sure we can give you value, and that will be a good relationship. That is free, but we don't want people to abuse it by trying to get tax advice from it. So we kind of channel you into the consult if that's what you need.
Makes perfect sense. And I'm guessing that's deductible as well, correct? That
Yes.
consultation fee is a business expense with TTS.
That's right.
Okay.
That's right. As is most of the fee that we charge for the tax return as well,
Sure.
because otherwise tax compliance fees are no longer deductible with the new tax law. But with the TTS and mostly focusing on that aspect, that's what's dominating the return. That's all a business expense.
Great, thank you. Mike F. is asking, should we choose an SCorp instead of an LLC?
You choose an SCorp which elects SCorp status. Excuse me, you choose an LLC that elects SCorp status. There is no such thing as starting an SCorp. You either start an Inc., a corporation, or you start an LLC, and either of them can elect SCorp status. We prefer the LLC route to the SCorp status.
All right, thank you. Crystal's asking, I have dual citizenship. She lives in Canada, but have to file U.S. taxes. Do these tax status apply to me still? Or
Yeah,
I'm sure Canada has something similar.
Canada's very different, and Canadian tax advisors do have different recommendations for how to operate in the U.S., so it's way beyond the scope of what we can discuss today. But as a U.S. citizen, you're a legal resident and you have to file U.S. tax returns. So you have the complication of the two regimes, which are not 100% compatible. But yet there's a lot of Canadians with that status, and the tax treaty kicks in as well.
So I'm guessing, and I'm just branching out from her question a little bit. If you're a U.S. citizen living in Canada and you have to file U.S. taxes, you're still eligible for TTS on your U.S. taxes, correct?
Right. But you want to make sure it doesn't trip you up in Canada.
Okay. Interesting.
And if you were a U.S. resident abroad in a tax-free haven, you might want to have the Section 911 foreign earned income exclusion and housing allowance. If you're in a high tax country, you skip that and you go for your foreign tax credit if the country has a higher rate. If you're doing the foreign earned income exclusion, you can then also arrange more QBI deductions in certain scenarios as well. So traders, let's say you're a U.S. trader and you go to Belize and you're in a tax haven country and you're living the life. If you want foreign earned income exclusion, you do the 911 exclusion for U.S. residents abroad. I cover that in the guide in the international tax chapter.
Great. And Robert, we're coming right up on an hour. You're welcome we've got a few questions left. Welcome to stay and do that, or if you have a hard stop, okay.
You can do a few more and then we'll, I guess, be a good time to stop. And then people can send me questions and I'll probably suggest the consult.
Absolutely.
But if it's a real quickie that we missed, I'll answer it, of course.
Okay. Just let me know. So Mark trades in an LLC with an SCorp election and 475. Do I have to pay myself a salary or just let LLC income flow to my tax return?
No, you don't have to, but the IRS does look for reasonable compensation in SCorp, which rules do not apply to a trading business because the underlying income is not earned. So if this is your first year or if it was an off year, you had losses, you don't need a health insurance deduction, we can skip the payroll because there's payroll compliance, which costs like $600 a year. And once you start the payroll compliance, you're supposed to keep it up by keep filing it. Now, if you have health insurance, you got to put that on the W-2. So I would say the answer to your question was yes and no. If it's that first year, you can probably wait a year on payroll. But once you start, you're going to keep it up. And that's part of the formality of the SCorp. So you want to make sure it's right for you before jumping into it. And that's what I cover in the consultation. A lot of clients come to me and they say, I want the entity. I read the content. And they really know they want the entity. And I might talk them out of it. And that happens pretty often. Or I talk them out of it for another year or two until there's a compelling benefit and the benefits outweigh the costs.
For sure. Let's see here. Hager, this is actually a follow-up to one of the first questions that was about the SCorp that had not been used. So he's asking, can we create an SCorp now and claim the loss we had in the last year?
No. S-Corps are just for the account you open and strictly for going forward. So if you form that S-Corp later in the year and the S-Corp elects 475, it only applies to the S-Corp period. You can't, that 1099-B that you get in your individual name, that cannot go onto that S-Corp.
And then secondary question to that, do you have to create a new account with your broker if you create an S-Corp?
Yes.
So I would imagine yes.
And IB is going to charge higher professional data fees for an entity account, which are like $125 a month for equity for NASDAQ level 2 or the real-time quote.
Sure. Mario, he's asking if you can elaborate on the copying service or automation that disqualifies you from TTS. And before you answer that, I'll specify, and everybody in this room that's with us every day knows that, we're not a copying service. We discourage people from copying trades. We do trade live, but we're talking more about ideas and thoughts on why we're taking trades as I just bought Apple, you should buy Apple kind of thing. So
right. And I wanted to have this discussion with you, Norm, and that's a great start. I mean, you guys probably have a disclaimer that you're not investment advisors. You're not giving investment advice for compensation.
Absolutely.
Isn't that right?
Correct.
And people, it sounded to me like that people are a fly on the wall. They integrate. I haven't seen the chat room. I haven't been in a live session, but
sure.
The key thing to me is that you're not telling everyone, buy this right this second at this price, sell it at this second at this price, use this exact stop loss order. From what I understood from Ryan, if the IRS was to sit down with 50 different clients of yours from the chat room, they would probably see a great divergence of the performance and the results.
Absolutely true. We're all independent and we trade live to show what trading is like, but absolutely not a follow service. So that wouldn't apply to this, taking trades. And then the other thing I know he's asking about automation are essentially APIs or building your own algos or using an algo too.
Well, a lot of our clients are engineer backgrounds. I mean, you can tell the dominated in northern Silicon Valley area because a lot of people have gone into trading from there. And a lot of them want to write algorithms and they're coders, they're software engineers. And if you're using 100% automation for entry, exit, and API scripting as an example, and I asked them, how much time do you spend a day? I spend a half hour trading, and I spend more time with back testing and charting and things like that, error maintenance. If they self-created, I think they should get credit for it. But if they're an auto executive and I ask them, how much time do you spend trading? 15 minutes. And how much do you know about trading? Very little. And they have an algo, ATS, automated trading system, that was created by a third party. All the entry, exit, API scripting, which IB offers, it's all just in the system. They just turn the switch on. They're not a trader. They're not getting credit for those trades. So there's all sorts of scenarios in between these ranges of self-creation versus outside creation. someone works for you, they help with the coding, but you're doing the development and the back testing. You want to check in with me, and it's, I'm like an umpire on trader tax status. I call the balls and strikes. And although I'm working for you, I will say you struck out in a flash, and we will not sign your tax return if we say you struck out on trader tax status. And for that reason, we have an incredible reputation with the IRS on it, because they know that we have integrity in calling the balls and strikes for the benefit of all our clients. And some of this stuff has not come up in tax court yet. It's based on common sense and our judgment.
Along those lines, I'd like to thank you for being an advocate for traders. Not only do you help out, obviously, your clients, but just the trading community, and you're advocating for us with the IRS and the rules. I know you've been busy with that, especially with the 2018 changes. So,
thank you, Norm. I appreciate it. We enjoy that position, and that puts us in a position to have a good business working with traders.
Of course.
And that's why we're committed to the niche.
Of course. So, Robert, let's go ahead and cut it off. We're 5 minutes over, and we did a number of extra questions there at the end. There were only a few I saw that were missed, but as Robert mentioned, he'll give his contact info, and you can shoot him some info on it. You mind putting that back up on the screen so everybody can take it down and take any notes? Or
do you see my main screen now?
I do, yes, sir.
The website?
Yes,
it is
sir.
the website. And then if you hit contact us up top, you'll see the email address, info@GNM Trader Tax or Green Trader Tax. So it's right there.
Great. And, guys, some of the questions, I'm always very shy about, I get asked questions all the time on this stuff. And I always say, I'm not an accountant. Here's some of the stuff I dealt with. And I can't thank you enough for spending the time with us today. We'll have this up in our education center for people that either couldn't make it or, or want to watch it again and catch up on anything. Reach out to Mr. Green with any questions you might have. Highly recommend his guide, his services. I've heard nothing but great things about those that have utilized it. Any closing remarks or any thoughts?
Well, Norm, it's great to be working with Bear Bull Traders and you and Ryan, and I appreciate the opportunity. I thought it went well today. I appreciate the interaction, you asking the questions, all the nice comments you made, and I'm looking forward to work with your traders. And our CPAs are standing by for year-end tax planning now. Now is a good time to have that consult with me.
That's why, I will push that once again, especially for any traders that this is your first year trading and you need to learn about the wash sale rule. It's time to learn about it now before December 1st rolls around, for sure. So, thank you guys very much. Thank you, Robert.
Thank you, Norm and Ryan.
Our pleasure. Thank you so much.
Have a great day, everyone.
Thank you. Take care.
Thank you.